Hey guys, welcome back to another episode of Summit Trading Up. Okay, so this is Friday market commentary, and I don't want the video to be too long. I was kind of looking at the likely bearish day at this time. So while I was recording, there was no audio, so I wanted to do a kind of um, background recording. So my analysis was looking at a buy side manipulation phase, or what I call it, um, manipulation phase to the upside for a very day. So this was New York AM session heading to PM. We finished for London session, and London session there was no opportunity. You can see I was outlining the previous day price action on 1 hour. I was outlining the daily FVG where price took out liquidity of the previous weekly low and rallied for opposite liquidity. And this is the topic I was talking about on the previous video, which I'm going to teach maybe on the next video. So once price takes out a buy side or sell side liquidity, heads for the opposite liquidity. That's what I kind of call it, the weekly AMD, the weekly accumulation, manipulation, and distribution fees of price action for Nasdaq. I don't know about your pair, but for Nasdaq. So I was kind of outlining this 1 hour FVG, that 1 hour imbalance. No matter what was going to happen at that PM, I was trying to comment that I don't buy above imbalance. Now take this thing as an homework, or as a homework. Sorry, take it as a homework for this weekend. Whatever you want to do, go and study your chart. See how price reacts to 1 hour imbalances. You get. Don't ever buy above a higher time frame BSL, higher time frame SSL or FVG or NDOG or NWG. I'm going to explain all of this. NDOG simply means new day opening gap. NWG simply means new week opening gap. I'm going to teach all of this. So stay tuned to the channel. Probably you understand what I'm trying to say. So what I was outlining there was that I'm expecting price to drop into this 1 hour fair value gap. So that 1 hour fair value gap, I wanted to see price there, and we had high impact news at 10 a.m. New York time, and I was expecting that high impact news to take out all these relative highs there, then drop to that 1 hour time frame. And my idea was that if I should see entry, I'll take. If I don't see any entry, I'll just no, it was a good day, but no trades. That's the patience you get. You understand? We traders. If you don't see your setup, you don't jump into trades. No matter even if it goes according to your analysis, you don't jump into trades. So what I was kind of outlining there was that you don't want to buy above higher time frame FVG. So that was what I was writing there. You don't want to buy above higher time frame FVG. Very important, huh? It might sound very strange to you, but go and test this. If you have a new day opening, the day opens, and you're seeing there's a higher time frame FVG below, and you're buying, you get liquidated, or you get stopped out because price it's mostly going to seek out for that higher time frame FVG or SSL, sell side liquidity. So that 10 a.m. news, we had a manipulation to the upside. I outlined this high. I wanted price to take out this high first. It did, but I was waiting for a simple entry module, the OTE, but price did not do that. At this point, people would start jumping into trades, thinking we are bullish for the day. But I had my own analysis. I had my own, my own point, my directional bias. We've already hit the weekly buy side liquidity. Get my point. If you check from the last video I dropped on Monday about what I was expecting throughout this week, I told you that I was expecting bullish to a certain high at that daily time frame, and we go to that high on Thursday, and what we're supposed to be expecting on Friday was retracement, and that's what I was looking for. I was looking for that retracement. I was waiting for that retracement to happen before NY. If it happened before New York, we would have continued the bullish movement, but that's retracing to that hourly AVG. But if it did not happen towards London, then we'll retrace towards New York. That was my point. That was exactly how I was looking at the charts this on Friday. So I outlined that that void. I outlined that void. I was saying I'm expecting price to drop to that void. I wanted to pick a trade at that void, but I did not. I want to, since I've not gone to that stage of the channel yet. Why I enter, because I said before, I have other modules, but I want to stick to just one first for now. That's a simple entry module. So I was saying I'm going to wait, right, for price to give me the simple entry module for I can enter, but unfortunately price did not give me the opportunity. It just went straight to that early AVG. But the thing is, I was kind of pausing and playing the recording, so the video doesn't get too long. I know most people get bored when videos are already too long. They don't want to watch that. They just want to watch 3 minute, 4 minute video thing and filter what they can get from that video. But trust me, most of the important things are inside videos. You just want to do with your notes. You want to be writing down things as you hear them. You might not you might come across something you've not heard before, and you know you just want to jot that down. So my point was, I was expecting price to trade into that void, right? Okay, so that's I was outlining that hourly average. Say I want price to come down there. I go to the 1 minute time frame looking for OT, possible entry to short or sell the markets to that average. So I was expecting a consolidation at that void. That void would have been my entry. That void would have been my entry. But I don't want to do anything contrary to what I'm teaching basically in this channel. Maybe at that particular time when I teach about this void entry or volume imbalance, I call them either volume imbalance or void entry. You understand what I'm supposed to do there. But I said, okay, instead of going for that entry, I'll wait for the simple entry module. That was what I was typing there. I'm waiting for the simple entry module. A break of this low is the simple entry module, and that's when I enter. So I was especially waiting for the simple entry module to take place, which is what I've taught to the channel so far. There are many other entry modules, trust me, but I want you to be familiar with this one, because there are many people who don't get to they don't get that experience after 1 or 2 events. You just want to keep doing, you want to keep doing, you want to keep doing for a month to 3 months or so. Then you know that you gotten familiar to this simple entry module, and it happens everywhere in the chat. That's what I want to get used to. You don't just go to the chart looking for anywhere you see the OT or the simple entry module and start entering for short or buy. You start entering for sell or start entering for buy. That's not how it's done. Okay. So at that consolidation, the price is consolidated, I was kind of thinking that would have been my entry, but I know what to do. Like I said, something out of it. I already typed that down, that I'm waiting for the break of that low. At this point, many people will be waiting for waiting for um waiting for buys. They want to place their buy order there. As I was telling them, they're thinking this is a breaker or this is a mitigation block or whatsoever they want to think, or you think that's the simple entry module giving you an indication to buy. But that was all wrong. I knew, and this is something you should really practice for the weekend. Study these things for the weekend. Wherever there are buy side liquidity, sell side liquidity. If you watch the video on liquidities, insight on liquidities, you understand what I mean by buy side liquidity. Because if you go to your chart, I'm not giving you holy grail. Please understand this. I'm not giving you holy grail. I'm not spoon feeding you. I'm giving you things because I want to spoon feed you, or it will take me long. Trust me, it can take up to 100 episodes for me to share everything I know. But I want you to put in the effort. Start working hard. If you look at the left of the daily time frame or the 1 hour time frame, we have a buy side liquidity there which we broke with impulse. Remember what I told you? about the video insight on liquidities. If you know what that video insight on liquidities, I go to the channel, I'll find that now. So we broke with impulse, leaving FVG, and that would have been the price trading back to FVG and continuing the move. So we are trading back. This Friday was retracing to that FVG. Monday, what I'm likely seeing is continuing the buy side to another, continuing the buys to another buy side liquidity. That's clearly what I'm seeing. But first, we must hunt for higher time frame sell side liquidity. That's just how it works, right? The weekly AMD. That's another topic I'm going to teach. Okay, so you can see I was pausing and I was playing the video, pausing and playing the recording. So that was where I was expecting price to trade back into for my short entry. The price did not do that. I can see this large displacement there. It broke that low where I outlined. That consolidation at that void would have been my entry. Normally, if I was not doing any recording or any commentary, any market commentary, that consolidation at that void would have been my entry. Because at this time the algorithm was pulling very heavily, and all I just see for saw for the rest of the day was continuation to the downside. So I was expecting price to retrace back to that imbalance, taking me down to this earlier video I'm outlining there. So I will not call this miss entry because I had a perfect entry. But for the sake of the commentary I was doing, Friday commentary to show how market is closing, what we are likely expecting next week, and all of that. I promise to be doing this every Monday and every Friday, of which I am. So I would have entered that trade, but because I was commenting and I was recording, I had no chance to do all of that. So I'm looking at ES2, that's US 500. The price action, trying to correlate it with US 100 because they likely work the same. So whatever ES is doing, US 100 is doing on one and likely similar. So I wanted to see if we are on the same side. You get, that's why I always have that tag for US 500. Sometimes DXY. DXY kind of does the opposite of what Nasdaq and ES does. So I was just writing there. Now we wait. Patience is the game. So you see, at this point, I had a perfect entry. I had a perfect direction, a clear vision of where I wanted price to. I wanted price to trade down to that earlier video. Could be a snipe, could be whatever, but I wanted price to go down there. And at this point, I did not just jump into the market because that's what people would be like, oh, I've missed my entry. Let me jump into the market and all this kind of thing. I had a perfect entry there, but for the sake of the commentary, I like saying it because I missed lots of dollars there today. But market will always present opportunities. Market will always and always present opportunities. Okay, so I was saying price don't have any reason to go to the upside because all those zones are efficient. All the zones at the upside there are efficient. So price have no reason to go there. That's why I was very strong in putting my stop loss right there. In case you're asking, why is my stop loss there? But the thing is, most price trades down to your targets. You're not looking for trades, right? The FVG, the Hardy FVG was my target. Once price trades down to it, you're not looking for trades. You just want to read market commentary. I had a scalp, an opportunity for scalp, to scalp the market long towards PM reversals. Okay, another thing you want to comment on your notes or you want to add to your notebook is during PM, whatever direction you have, that's why most times people get taken out by and break even and trailing your stop loss because you don't actually know when you're trailing your stop loss or when you're setting your break even. What time of the day are you doing that? That's where time and price is very important. So at PM, price is likely to reverse. Like let's say you have a very bearish direction. You wanted price to go down to take out a sell side liquidity, and you're already on that trade. Let's say for instance, and it's towards that launch time. When I talked about calibration of charts, if you watch that video, you know that the launch time is around 12. So yes, 12 to 1 12 to 1. So okay, so this is the early average. I want a price to trade back to it on the early time frame. Then we seek out for buy side liquidity again, which is good, likely going to happen next week. So around 12 to 1 is launch time, and towards that launch time, you always expect a reversal or a retracement. You always expect that. So at that time of the day, if you are on any break even, if your trades are set on any break even, you'll be thinking, oh, price is coming for my stop loss. Also, if you're on the right side of the market, price is not coming for your stop loss. It's programmed to be that way. At PM, price always is likely 70% of the time reverse. So I was waiting for that reversal, and that reversal would have been a short scalp, but I don't want to do anything because I saw this displacement, and I knew that the selling was very heavy, so I don't want to risk any scalping long for anything. I don't want to risk it, so I don't take low probability trades. That's me. I was waiting for that sell. If there was no sell, then I'm done. So that was the line for the early FVG. I can see that. So price just went straight to without giving me any possible UT. You see, what the essence of this video I'm trying to, if you're picking out anything from this, is that you are not supposed to rely on just one entry pattern. I have like four, but I've only thought about one. So in case you think you've already known everything, you've learned everything, no need for you to come back to the channel, no need for you to subscribe. Let me unsubscribe. I've learned what I want to do. You do yourself more dynamic, except you can go by yourself and study these things and find them out yourself. I still have three more entries I have not thought about yet. So one is just a simple entry model. One we have the void, one we have the volume imbalance, and one we have the unicorn. Unicorn is kind of a hidden gem, very very perfect. Once you see it, you can't unsee it. So I'm making a lot of commentaries. Yeah, that if price should refill this FVG, we will no more buy. We will look for buy opportunities. Okay, that was my point. If price should reach for that 1 hour FVG, we'll be looking for buy opportunities for that PM reversals, and they will buy opportunities, but price did not go further. It just went to the 5-minute order block and started tracing again. That was it, right? So it was a good day. At first, many people on Twitter, they saw price pulling higher. That's those people that like trading news, they were all on longs. And if you were on shorts, if you were selling before that news time, that 10 a.m., you see you would have been taken out from that buy side run. That's run for liquidity to the upside. That's run for sell stops. But if you waited after the news, you would have had a perfect direction. That's why I like telling people trade after effect. After effect is the big move, not the news itself. You can see price already reached for that lady FVG delta right in there. See, every reversal occur in the PM. Okay, that's what I'm writing there. I'm writing there, every reversal occur in the PM, and that's the line. That's my line for 12 p.m. You can see I marked a vertical line there for 12 p.m. and okay, price at that's lunchtime now. So price is doing that reversal, and I saw a scalp opportunity for buy. That PM is always a reversal per time, and after the lunchtime price continues to work. Okay, so you can see the OTE there, very perfect entry for a buy. So I was outlining that FVG. Price have reached out for that 1 minute and that 1 hour FVG. That was my target, and that was almost about 5 risk to reward ratio. I missed today, and I would have gotten up to 7 if I had picked my entry from that volume balance, but it's fine. I still have many more opportunities. The fact that I can spot these things anytime of the day, just come. You don't have anything, just study your charts. Spend 3 to 4 hours every day on your charts. Look at these candles as they form. Wait for your special session. I don't really trade London session. I trade London session on conditions. There are conditions where I trade London session. It depends on what the previous day did, what the Asia session did, and what a target for the next day is. So I don't just go blindly opening my chart and looking for non sessions to place orders. Okay, You need to have the information of the previous day, information of the last session, the previous session, and where we are likely going to mitigate, right? So we see how we reached for that 1 hour FVG, and we had a perfect reversal entry for the PM. So I was outlining that fair value gap. That was the fair value gap, the 5 minute fair value gap. That's the entry for long. That's if you want to take the scalp, but I'm not taking the scalp, just like showing you that that's what I would do if I want to take that scalp. I'm not taking the scalp because the selling spooling was very heavy at that time, but I know PM do reverse at some time. You wait for that OT, that's another scalp, and you wait for price to mitigate that 5 minute order block. You don't just jump into any FVG. Every FVG has its own narrative, you get. So you don't just take any imbalance because it's an imbalance. Let's take it. Because it's an imbalance, let's take it. So I was waiting for price to take a 5 minute block, of which it did. Because this was almost a full session. This was a full session, almost like 3 hours of analysis. Me there on my chart, and I was just there recording, just there watching the chart candles by candles, understanding the narrative, writing down on my journal, journaling many things. I know many people are not willing to sacrifice this time for their career. That's the thing. You need to sacrifice these little things. Time is the best price to pay for success. You have a goal, you have something you want to achieve, you give it your all, your time. I can guarantee that most of you don't even spend 1 hour in your chart. You just wake up, whether you pray or not, I don't care. You wake up, open your charts, look for other blocks to mitigate, look for trend lines to draw, and just place your orders, boom, you're out. Go about doing whatever I want to do. You're not giving it the time it requires. You get some people just wait for break of structure, they look for any break of structure. Oh, this is my supply, oh, this is my demand, then boom, they draw without any higher time frame narrative, without any narrative at all. That's not how we trade. For me, I consider the previous session, what or where is price coming from and where is price going to. Those are the two things you're asking yourself whenever you open your chart on a new day. Where is price coming from and where is price going to? Price is coming from a buy side liquidity. It's likely heading to a sell side liquidity or a higher time frame FVG. So price does three things. It's either running for liquidities, or it's rebalancing fair value gaps or imbalances, or it's leaving imbalance for later purposes. So you can see price reached out for that 5 minute order block I was talking about for the OT. If I wanted to take a short, but I would have taken a short there, invalidating my previous entry because price already reached for the 1 hour FVG, and I couldn't place any order again because it's Friday and market's about to close, so I don't want to be waiting for waiting over a week for over a weekend. Sorry, for my trades. I'm an intraday trader, so I need to keep trades for long. You can see this is Friday. That's what I was trying to comment. So we'll continue our market review on Monday. Let me just take that out of the way so you see my point exactly. Okay, that was a full stop. Alright, so you can see this the short scalp to that 5 minute FVG there, and that was all. So to conclude everything, we add this short scalp to the 5 minute order block, which is, yeah, you can see that's the order block for 5 minutes. This entry was no more validated because we've reached our target. So we are going to be looking at the outer scale. That entry was for the 1 minute view. Sorry, no, that entry was for the 1 minute view, right? And this was the order block for 5 minutes. So that was where price was likely heading to. They traded back to that 1 hour time frame. You can see the short scalp here, taking buy orders to this order, small at least 2 1 ratio you would have gotten from there. But I was not interested in doing that because my strong bias was um, bearish. But what I'm trying to say is that for every trade you get in, so you don't ignorantly place break even, and you should know the time of the day. These 12 p.m. to 1 p.m. are likely going to be reversals. Price might likely reverse back to your entry, then continue what it was doing. So we had for now market is closed and we'll be waiting for next week. So this was the 1 hour time frame. 1 hour time frame AVG I was calling earlier. You can see price straight back into it, but we still have other AVG here. And as market is opening on Monday, you should be telling yourself one thing from what you learned today: don't buy above higher time frame MVG or buy side or sell side liquidity, sorry, and don't sell below higher time frame MVG or buy side liquidity or new week opening gap or new day opening gap. I know you might be asking what is new week opening gap, what is new day opening gap. I'm going to teach you about that later on, right? But I just want you to understand this. So as market is opening on Monday next week, I'll be considering that there's still a lot of spaces for price to fill in this every day. I'll be considering that. I'll still have other imbalances here, so I'll be waiting for price to trade back to that first. That means I don't trade London session on Monday. I'll wait for price to do its thing that London session, and the PM I can engage. So I hope you find 1 or 2 things insightful or helpful from this video. I wanted to make it more than this, but this all I got. Trust me, next week will be better, where you see me push the buttons. This was just live analysis, no trade, because I likely did not see what I wanted, but where I wanted price to go, it did that, and that's what I'm telling you guys. Avoid the noise. Avoid the noise you see on social media. Most people are analysts, not traders. Most people are marketers, not traders. Just focus on you. If social media is a problem, quit social media. Focus on you. Learn these things. Spend times, hours on your charts daily to practice these things, study these things. Let me tell you, for somebody who reads thousands of threads, reads thousands of PDFs, watch thousands of videos, you will not get that experience from somebody who is actually studying his own chart. Understand that. So no matter the amount, no matter how that thread on Twitter or that video is valuable, if you just watch it like you're watching Netflix and you're not going back to put in the effort, put in the time to study, to find these things, and you're not writing them on your notes, you will likely not learn anything. One thing you should know is that experience can't be skipped. So if you don't start doing it now, if you don't start putting in the work now, you likely regret at the end of the year or at the end of the day, or you might likely give up that trading is not for you and all of that. So experience can be skipped. This is weekend. I hope you have a peaceful weekend, happy weekend. Go out, take your family out, visit friends and families, and do all sorts of stuff to make you happy. But always remember to study the chart. Alright, that's what makes us traders. You are not perfect. You don't have a holy grail. You keep studying, you keep studying, you keep studying, and that's how you improve. So until next time, be safe.